So in the overnight session, the market has been running on below average volume and the sell side has been more dominant. And now heading into the open, our intermediate term bias will continue to be bearish and our short term bias will continue to be neutral, which means we need to remain flexible and open to the market moving in either direction. And the main question today is whether this overnight breakdown attempt below the April 16th lows is going to result in any kind of follow through. On the upside, we have aggressive resistance at 52.50 to 62.5, and holding below that area would signal the sellers in control, and a break above it can bring the pre-market resistance zone into play at 52.69.5 to 80.5, where sellers may still be active. And then above that, we're going to be using the 52.85 to 88 as the intraday bull bear. That's more of a reference area where holding above it could shift control from the sell side back to the buy side, and holding below it can leave the overnight weakness in play. On the downside, in the event that this overnight breakdown attempt continues, we have pre-market support at 52.31 to 41. That area has already provided a response, so if the market continues to test that zone, it will be more likely to break. And a breakdown below 52.31 on broad market weakness and sustained downside momentum can result in a test of 52.06 to 16, where buyers may be active, but it's not a significant area of support. And if the market is selling off on excess weakness and big and sustained downside momentum, especially if it's happening on rising volume, then ES may need to head lower into 51.80 quarter to 87 quarter and 51.4675 to 66.75 before responsive buyers step in. And on the downside, the 51.4675 to 66.75 as well as 51.05 to 51.26 are both bias confirming zones, so there is a better chance of buyers being active there. Now, in order for this overnight weakness to continue, we will need to see signs of initiative selling in real time. And so far, the market has been running on below average volume, and that also makes it more challenging to trade a continuation move, because when the market is running on light volume, there is a higher probability of chop and balancing type of activity. So unless the volume picks up after the open, we will need to be more defensive, simply because on light volume, the market can be a bit more rotational and it can take more time for any directional move to play out. So to be clear, just because we're running on light volume doesn't mean that the market can't continue to head lower, but the character of price action is usually more choppy in lighter volume environments. So even if the market is going to head lower, it can take more time and there can be a lot of chop and back and forth movement along the way. So it's important to be aware of the type of environment you're in and then mentally be prepared to deal with more chop if we continue to run on below average volume. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the aggressive and pre-market resistance zone. That's going to tell us whether the sellers are still in control from the overnight session, and we'll take it from there.